Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have an amazing guest for you today. He's an industry titan, a thought leader, an expert in the title business. Please help me welcome back to the show, WFG National Title Insurance Company founder and executive chairman, Patrick Stone. Patrick, welcome back to the show.
Thank you, Michael. It's a pleasure to be here.
Oh, well, it is great to have you on the show. I'm excited to have you back. Last time you were on, though, we were in completely different conditions in the market, right? We were right in the throes of the pandemic. People were learning how to work in a remote workforce. We had rates that were in 3% range. Boy, have times changed. Give me a little bit of kind of your perspective of where the market is right now.
Well, the interesting thing, Michael, is if you pay attention to most of the press, they don't give you historical context. And if you compare this to where we were prior to the pandemic, we're at about the 2017, 2018 level. Will it improve from here? I definitely think so. I do think inflation will abate, and I do think rates will come down a little bit. I will tell you this, and the thing that probably leaves me more optimistic than anything else is the desirability of home ownership is still very, very, very high. The need is there because we have a large amount of the population in first-time homebuyer age, but the desire is also still there. And I was wondering if that was going to abate a little bit with the pandemic going away, but it hasn't. People still want to own a home. So I'm quite optimistic about the second half of this year and then 2024 and 2025.
Well, I agree with you, and I'm so glad you brought up that historical perspective, because if you compare it to the last 2 years, yes, market's in a tough spot, rates are a lot higher, but historically, there is still an awful lot of volume being produced. People need home ownership. It's really important to have that perspective. So I'm so glad you brought that up. So as we start talking about the market conditions, there's so much talk about title, appraisal, everything that's going on. And this is really one of your key wheelhouses that shed some light on what are some of the pain points, what are some of the challenges that lenders are trying to address in this market, especially as it relates to title and appraisal and valuation and some of those things.
You know, it was really interesting because during the pandemic, everybody was very busy and made a lot of money. And there was very few conversations about efficiency gains or focusing on points where we could cooperate and develop a more efficient answer or automate. A lot of the fintech energy and money was going into disruptors or innovation. What has happened here recently, and it happened fairly quickly, is we've returned to thinking about efficiency gains. And so our tech subsidiary is very much focused on working with lenders and other clients to identify areas where we can make improvements in the process. And there are probably 100 different places where we can make improvements. Each one of them may be fairly small, but in aggregate, it will make a tremendous amount of difference. So I would sum it up by saying this: technology and the people driving it are more interested right now in increasing efficiency and helping people operate in a more cost-effective manner. That will benefit the industry long term.
Well, and I love how you talked about it will benefit the industry, not only in the short term, but in the long term. And I think so many times when people really look at how do I create a much more efficient process? How do I do a better job manufacturing a loan? If you can do it in a tough market now, then hopefully we don't just have to use, I remember the former CEO of Ellie Mae used to say, which is now ICE, Jonathan Kors always used to say, in the mortgage industry, we have a huge propensity to use human spackle, right? Volumes are real low. Let's throw a bunch of people at it. Volumes, are starting to rise and there's less volume, and now we have to cut people. And I think if people truly embrace these efficiencies, that when the market turns some, they don't have to just throw a lot of people at it, and they can really create a sustainable lending model that is profitable and keeps things moving in the right direction.
And if I can just add on that a little bit, we really focus right now on trying to do thoughtful get-togethers, if you will, and whiteboard processes with our lender clients and other clients to see if we can identify areas where we can eliminate duplication of keying data, or if we can automate and use APIs to exchange information more efficiently. And that is actually resulting in some fairly significant changes. When everybody's making a lot of money, nobody's interested in sitting down and peeling the onion. But right now, everybody's really focused on saving money and getting more efficient. And I think it will have a profound impact going forward.
Well, let's talk about that a little, because I love when I see collaboration in the industry and partners like yourself who are saying, hey, we're willing to roll up our sleeves. We're willing to meet with you. Let's collaborate. Share with us your pain points. Talk to us about where are some of the bottlenecks, where are some of the inefficiencies. And when you can sit down and have those candid conversations, you typically will come up with some very good solutions. And it's a win-win on both sides.
Absolutely. Here's what, I don't know if I mentioned this to you before when we spoke, but I did a little survey about 20 years ago, and it's outdated because it's 20 years ago. But I was stunned to find that on the average transaction nationwide, the names of the parties and the legal address of the property involved was entered on average of 80 times by all the participants. Now, that has shrunk considerably, but it's still a tremendous rekeying of data by all the participants. If we can just eliminate the rekeying of data, we save time and money, but we also remove errors and other confusion, right? So we're really focused, our technology company is really focused on having a single source of information that everybody can access, a data vault, if you will, focusing on making sure everybody is statused on the transaction and that everybody gets updates. So we don't have to spend all that time on the phone or emailing or texting back and forth. What's happening here? What's happening there? Or do you know this or do you know that? I mean, you really think about our real estate process and it is still incredibly inefficient. Now, I'm going to tell you that's mostly because we are all regulated by different regulators. Business practices are different in every location. So there's a lot of things that contribute to that, and it's not going to go away tomorrow, but we can focus on making it more efficient.
Well, and I think as you make it more efficient, some of the other benefits is not only will it give a better borrower experience, but it also gives a better user experience for all the internal users of these platforms, right? If we're trying to get the cost to originate a loan, the MBA said that it was somewhere around $11,000 when they did their study back in October. Wow. I mean, how do we get that down? You see so many other industries where they roll out new technology. It's the 5th generation, the 10th generation of the technology, but the cost to do all of that has gone down significantly, and we haven't quite been able to do that in the mortgage industry. So what are some of the things you guys are working on? What are some of the other things that you guys think you can help as you're looking at creating some of those efficiencies?
Well, if I can, I'm going to back up just a second and share with you that we have put a lot of emphasis on customer experience. And I emphasize that by telling you that we do NPS scores on all our operations now. And that has really got our people energized and focused on making sure there's a good customer experience. A good customer experience results in a return or repeat business for the lender, the realtor, and us, right? So we're all in it together. And again, we are really, really focused on eliminating multiple keying of the same data. We're really, really focused on using APIs for integration so we can digitize the process more efficiently, if you will. Again, we'll never completely overcome the hurdle of having different regulatory bodies and different business practices.
Right.
But we can cut a lot of time and cost out of this process, eliminate a lot of errors, make it a lot more transparent for the consumer and easier for the lender, realtor, and the title company.
Fantastic. And it's exciting to see, like I said, that collaboration of you working with people doing these whiteboard sessions. If a lender wants to do one of these whiteboard sessions, what's the best way that they can go about scheduling that with you guys?
Well, we have reps in our lender services division, but call WFG Lender Services Division, and they will set up a whiteboard session with you. They love it because one thing that happens every time we do it, we learn something.
Absolutely.
Every time.
Well, it's kind of like doing these podcasts. I learn something new from every guest. I get a new perspective. So, like I said, I'm glad you guys are doing it. I think that collaboration is so critical and so needed in this industry. And if we can pull together, we can start creating those greater efficiencies. Patrick, what do you see on the horizon kind of for the rest of the year? What do you think the market's going to do? And what do you think WFG is really going to focus on throughout the rest of the year besides streamlining and efficiency?
Well, my personal opinion is starting with the February numbers, which come out in March, you are going to see inflation start dropping meaningfully. And I base that mostly on the fact that a great percentage of the CPI index is owner's equivalent rent. We all know that the rent increases peaked about 6-7 months ago and have started trending down. And the owner's equivalent rent component of the CPI is about 44%, and it runs about 6 or 7 months in arrears to the actual numbers. So having said all that, I do believe you will see inflation numbers start coming down with the March reports. And I do think you'll start seeing mortgage rates easing a little bit. They're not going to drop like a rock, but they will ease. I'm sincerely hoping to see about 5.5% 30-year by the third quarter, and 5 to 5.25% by the end of the year. If that happens, we'll see a meaningful pickup in business for everybody. And that again is a function of affordability, and with the mortgage rates coming down like that, you'll get more and more people able to do a mortgage. So I'm optimistic about the second half of this year being meaningfully better than the second half of last year. That's a pretty low bar. I do think it'll be better. And then, what we're focused on internally in our company is that CX, that customer experience, and the NPS score. And we put a lot of focus on it, but we made it important by sharing the reasons why. We made it important to everybody to have a high NPS score and to make sure that our clients get more business and our clients make more money. And I say this all the time: if our clients make more money, we make more money, right? So the thing that sometimes is missing in this business is we're all in this together.
Absolutely.
Together. No, nobody's going to make money without the other participants in the industry also being successful. So I'm optimistic that the environment's right now to foster more cooperation and more collaboration. And I'm optimistic that we'll see the benefits of it later this year.
Patrick, you are always a wealth of knowledge. I love having you as a guest on the show. You are welcome back anytime. Thank you so much for contributing to this episode of the Fintech Hunting Podcast.
My pleasure, Michael. Thank you for having me.